Hey everyone, welcome back to Corporate Decoder. Today, L.R.H.C. Corp just filed an Amended 8, and I am seeing a slight course correction that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is mostly about fixing dates and details, but it does shed a little more light on how the company is raising money. So what we have here is an amendment to a previous report. Think of it like filing a correction to a document you already sent in. Rosa Holdings Corp filed an earlier Form 8K, and now they are filing an 8K/A to fix a few things. The main reason for this amendment is to correct the date when a key event happened. Initially, they reported the date as the 10th of July 2026, but now they are saying the earliest event actually happened on the 9th of July 2026. It sounds minor, but in the world of SEC filings, dates are important. They also are clarifying that a specific action, the filing of a certificate of designation for Series E preferred stock, was done on the 9th of July 2026 and approved by the Board of Directors on the 8th of July 2026. Now, let's talk about what this filing is really about. It involves a securities purchase agreement, which is basically a contract to buy and sell securities. Rosa Holdings Corp entered into this agreement with an institutional investor. Through this deal, the company is issuing 250 shares of its Series E convertible preferred stock. Each share has a par value of $0.0001 and is being sold for $1,000 per S-share. This means the company is raising $250,000. And here is a crucial update added by this amendment on the 13th of July 2026. These 250 shares were actually issued to the investor, and the company received the full $250,000. This is important because it confirms the money has come in. This Series E preferred stock has some specific terms. For starters, this preferred stock does not pay dividends. It also has very limited voting rights. The company states that these preferred stockholders only get to vote if something specific happens that would negatively affect their rights, like changing the company's articles of incorporation or bylaws in a way that hurts the Series E preferred stock. They also get voting rights if the company proposes to increase the number of authorized Series E shares, create new types of stock that are senior or equal to Series E, buy back their common stock, or pay dividends on that common stock. Now, the really interesting part for investors is the conversion, right? Holders of this Series E preferred stock can convert their shares into the company's common stock, which is the regular stock you see traded on the market. The amount they get depends on a few factors. The conversion price is set at $1.58 per S-share, but this can change. There is an alternate conversion price that can be even lower based on market prices. If they convert at this alternate price, the value they convert is actually increased. There is a limit though. A stockholder cannot convert their shares if it means they would end up owning more than 9.99% of the company's common stock. This is a common feature to prevent a single investor from gaining too much control through conversions. This section is quite important. It means if Rosa Holdings Corp issues new common stock or other convertible securities at a price lower than the current conversion price of the Series E preferred stock, the conversion price for the Series E shares will be lowered to match that new, lower price. This is designed to protect the Series E investors from dilution if the company sells stock cheaply. It is essentially a built-in adjustment to ensure their conversion into common stock remains valuable relative to new issuances. The company also has the right to buy back all of this Series E preferred stock. They can do this at a price that is either the original amount invested or a potentially higher amount based on the market price of the company's common stock around the time of redemption. This gives Rosa Holdings Corp some flexibility to get rid of this preferred stock if market conditions are favorable for them. This section confirms that the sale of this Series E preferred stock was not registered with the Securities and Exchange Commission. This is allowed under certain rules like Rule 506 of Regulation D, which provides exemptions for private offerings. Essentially, they sold these shares directly to an accredited investor without the need for a public registration. This part reiterates that the company's board approved the filing of the Certificate of Designation on the 8th of July 2026, and it was officially filed on the 9th of July 2026. This action formally creates the Series E preferred stock as a distinct class of stock with its own set of rights and limitations. Finally, this section lists the documents that are part of this filing. We see the Certificate of Designation itself as Exhibit 3.1, and the Securities Purchase Agreement is incorporated by reference from a previous filing. Okay, let's put this into perspective. Rosa Holdings Corp is a real estate services company. Its market cap is around $2 million. With the stock trading at about $1.11, Recent news shows they completed this $250,000 Series E preferred raise. This is a pretty small amount of money for a public company, especially considering the stock's wild price swings mentioned in some headlines. This filing itself is mostly procedural, correcting dates on a transaction that happened a few months ago. The core of it is the $250,000 raised through Series E preferred stock. While this capital injection is positive, it is important to note its size relative to the company's overall market value and share price. The terms of the Series E stock, especially the conversion rights and the anti-dilution protection, are standard for this type of financing. The company can force redemption, and the investor can convert into common stock with certain safeguards. What I am watching here is how this $250,000 is being used, and if it can move the needle for a company with a $2 million market cap. When companies raise money with preferred stock, especially at these smaller amounts, it can be a sign of needing capital for specific projects or operational needs. The key is what returns this investment will generate. The fact that it is a private placement under Regulation D means it is going to a sophisticated investor, likely looking for returns that justify the risks. The stock has seen some unusual price action recently, with a significant jump on the 14th of July, followed by news of this raise. It's possible the market reacted positively to the capital infusion, however small. But for a company with such a low market cap, even small amounts of capital can have a magnified impact, both positive and negative. The risk I'm watching is whether this capital will translate into meaningful revenue or profit growth, or if it is just enough to keep the lights on. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.